Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
We are back, Dan. You know, man, can you believe it's October already?
I know.
Like, seriously, right? Like, you think about how fast time goes. It's October. And you know what that means in October? Halloween's coming.
What are you going to be for Halloween?
Yeah, I was just about to ask you that. So I'm going to actually be a doctor. I always be a doctor because you can wear scrubs.
Yeah.
And just relax. And you fit in and you participate.
They fit you?
Yeah, they fit me. I got 3X. 3X pair coming.
Yeah.
But you know what also comes up is the election. And we're not going to obviously talk politics.
No.
But we definitely could talk about how political campaigns and this time of year impacts investing.
Yep.
And so I want to pick your brain today on the significant impact that policies and economics and all this plays a factor into decisions of real estate.
Yeah.
So, as you think about you investing, tell us more about how do you think about that? Because it comes up every 4 years, right, at this time, and you start to see people can be gun shy, they can hold back a little bit.
Yeah.
What's your strategy? What's your thoughts there on just from an uncertainty standpoint?
There's a lot there, right? Like, I think we're having this conversation every day with like somebody. It feels like right now, and I hear like people, it's not just real estate, right? It seems like the entire world, at least in the US, right? Our world here starts to like shut down.
Right.
People get a little bit gun shy about spending money on cars, right? And all of a sudden they're holding on to their cash and their savings as the most critical thing. And I'm going to wait till after the election. Is like, it doesn't matter what you're selling. It seems that is like the greatest excuse not to pull the trigger on something.
Yeah.
But I think, what's happens every election cycle since I've been in real estate is certainly a slowdown in activity, right? We start to see that not just from investors, but also from retail buyers that, just due to whatever's important to them, they're going to wait. They're just going to wait to see what happens in the election. And I think what's funny too is like, we'll share in a little bit too, like some of the statistics of what happens in the election years. Mm-hmm. But it's like everybody's waiting for some big event, right? Like it's this like big thing. And then it ends up not being much, right? Every year.
Right.
And the one thing I think that, is interesting, especially in this election cycle, it's the 2024 election cycle, is that mortgage rates didn't come down, right?
Right.
And typically that is the case. So 11 out of the last 11 presidential election cycles, mortgage rates were reduced the month prior to the election.
Oh.
And this will be the first time that we actually saw mortgage rates go up in an election cycle.
Wow. So everyone's in this wait and see mode. Plus, obviously, the timing, right? It's the holidays.
Yeah.
Most people, I always saw people buy cars. You're taught like get cars at the end of the year, but it's interesting that we've seen a huge slowdown in activity. But again, regardless of your political beliefs, there's still an impact and volatility.
Yeah, sure.
There.
Yeah, I mean it's seasonal too, right? I mean that, like, to your point, right? Like it's once Halloween hits in real estate in general, it starts to just slow down.
Yeah.
A lot of people slow down. Leo and I were talking about in our last episode, we were talking about how Q4 for us historically has always been a good time to buy. And, I often look at Q4 as an opportunity to buy. I mean, you've seen me in the last couple of weeks, I've started to ramp up my personal buying just because I think it's a great time to get in while a lot of other people are reluctant to do so.
Why is that? You touch on that a little bit.
Yeah. So, especially without retail buyers coming into the situation, you know. So like the stuff I've been looking at right now is I've been looking at stuff that I can flip, like not that I'm going to buy it and rent it,
Right.
but stuff that I can flip and move really quickly on. Because if I buy it now, and let's say I close in, you know, the first, second week in November, you know, I've got all of November, I've got all of December, and I've got, you know, part of January to renovate the property without like losing a ton of market activity, right? So during that period of time, there's just not that many people looking anyways. And if I can put that property back on the market in February and March, especially here in Phoenix, like that is going to be our busiest buying season is, you know, when the market's booming, we've got all our winter visitors here, right? We've got all that stuff going on. But I can buy it now and I can get a little bit of a discount because when I'm making an offer, I'm not making an offer against that retail buyer who wants to move in December. Like I don't know many people that move in December,
Right.
you know? So I think, you know, by being able to be flexible and buy right now, you can actually get some really good opportunities. And then the home sellers and the people that are on the sell side of it, they tend to want to get it sold before the end of the year, right? They want to get it moved off their books before the end of the year. And so, you know, I have just found that Q4 for me has always been a great time to buy. I mean, I would say probably 70% of all the stuff that I bought it in Q4.
Right.
Just as a result.
But this Q4, given it's a election Q4, it proposes different animal, right?
Yeah.
So from a taxation standpoint,
Yep.
are you concerned at all? Like, depending on who wins, they can implement some taxation that you're not ready for or some other regulations. Is there any concerns there?
I think in every election, you know, what we hear is some sort of political rhetoric about what they're going to change and how they're going to change, you know, housing. And I think the big thing that we're hearing in this election is like affordability, housing affordability, and how to make sure that there is affordable housing for everybody out there. The part of it that, like, you know, Leo and I chatted about this a little bit the other day was the, you know, one of the candidates this time around has made mention of commercialized buying or these large investment groups that, you know, they don't want to continue to buy real estate.
Right.
And, you know, a lot of like the big leaders in the SFR space of those groups, that happens every election. They, you know, that, but nothing ever changes. And the reason that it doesn't change is one is like HUD doesn't have jurisdiction over that. Like they don't actually, it's not something they can control.
Right.
And, you know, so it's not like they can go force a bunch of people to sell their assets. You know, they just can't force a public or private company to sell properties. That's not constitutional, right? You can't do that. But then to restrict them, right? You start getting into like, well, who are you going to restrict?
Yeah.
And then how are you going to restrict them? And wait, like, you know, what's the dividing line? Is the dividing line, you know, a guy that buys 10 pieces of property, or is the dividing line 5?
Yeah. Where does it stop? Yeah.
Where does it stop? And then anybody who falls on either side of that is going to feel victim, right? And so what ends up happening, like, because this is honest to happen since, like, you know, the industry had really started to take off after like 2006, is every election cycle we hear about this. What they don't talk about, right, is that those big groups, they aren't even really the ones buying. I mean, they buy, right? They own, but they only own 2% of the entire rental pool, right? Of the whole housing stock in the country.
Right.
You'd have to go to every mom and pop investor in the country. And that's how people got wealthy in this country.
Yep.
To say that you can't do it, you know? So I think, you know, this time around, to your point, it does feel different. It does feel like that the two candidates are kind of far apart on all kind of taxation and regulation topics, right? And one is more, you know, let's get more. One is we should have less. At the end of the day, you know, I think that political rhetoric is good. It's good dialogue, and it keeps everybody on their toes. But it's very hard to see legislation change in a 4-year, 8-year period. It tends to just be rhetoric to get a vote, and then it doesn't really become much, right?
Yeah, you definitely get a sense of nervous energy,
Yeah.
both from the residential market, but also the commercial market as well,
Yeah.
right? What differences do you see there in between those two?
Yeah. Well, I think, like that residential buyer right now is it's a mortgage rate issue, right? I mean, what's funny is like mortgage rates aren't even historically high right now. They're higher than they were in, say, the COVID years, right? The COVID years, it was like 2 to 3% interest rates were normal.
Yeah.
But what the reality is like a 6% mortgage rate is actually really normal. Like that is totally normal. Now, I think what's different about this though is that for that residential buyer, this is the first time we've had historically higher interest rates and absolute high home price appreciation, right? So home prices haven't come down as a result of mortgage rates being high. Usually it's a seesaw, right? Mortgage rates go up, home prices come down. In this particular case, we saw mortgage rates go up, home prices go up. That we haven't seen for 30 years. Like that hasn't happened for 30 years. Have we seen that kind of a situation? And what it really boils down to is the fact that like we had such a buying frenzy over that whole COVID time, right? So many people were moving that now they're locked into these 3-4% mortgages, right? 2-3-4%. It doesn't make any sense for them to sell their property and just move, right? The only people that are moving have to move. And, they will start to have to move. And I think we're starting to feel that now as supply starts to tick up. If you have to move and your home has to go on the market, well, you've got to be the most attractive girl at the prom, right? So you've got to start dropping your price in order to get some offers on your property. And, so the residential market is much easier to predict than the commercial side of things, And, like I said, I mean, this is like a unicorn. We just haven't ever seen this. I mean, every economist I've listened to, talked to, whatever, they are all looking at 2024 as the most unique economic year that we've ever seen. We just simply have never seen a year where we've had home prices continue to go up, supply super restrained, and mortgage rates going up, right? Like all of those things typically don't add up together. And, something's got to break. And I think we're seeing the early signs of it right now, which is odd for an election year. It's usually that, the market is in much better condition going into an election, just so that incumbent or whoever has the seat right now can say, hey, I've got the machine cranking. But this time we're just not there. We're not feeling that.
Do you think there's a strategy that's better than another strategy? So fix and flip, room rental, short term, long term. Is it time to hit the panic button? If you're a fix and flip, maybe I should move to long term, or if I'm a long term, do you see people shifting strategies, or what are your thoughts there?
I don't necessarily think they need to shift a strategy. I think that like if I'm a flipper right now, what I'm thinking about is pricing. Like, how am I going to predict pricing when my property's ready to go to the market? And this is where we've seen a lot of flippers get in trouble, is that they don't have the foresight to see that, like, because typically you price a home, right? And it's a look back 90 days. That's how an appraiser looks at a property value. So they look back 90 days and they go, hey, here's all the properties that sold. This property looks like those, therefore it's worth X, right?
Right.
That's how listing agents prepare like a CMA, a current market, analysis on a property, or say what a property's worth. But in a market that's declining and going the other direction, you can't look backwards. I mean, it's a good place to start, but then you got to look directly forward and start to go, okay, where's the market going to be in February and March? And that is scary for some, right? And I think that's where a lot of flippers get in trouble, because there are like good looking deals on the market today. But if you're watching home price appreciation trends or the decline in home values, you've got to look at that property that, maybe today would have been worth, like if had you listed it tomorrow, was going to be worth 500. But by the time you get that property done 4 months from today, it's probably going to be worth like 475. Maybe it's worth 450, right? And you've got to look at those trends to be able to actually figure that out.
Yeah.
And I think that's one big thing. And then for the renters, or the people that buy rental properties, affordability is the problem, right? And so right now, if they're borrowing money to buy a rental property, their cost of capital is just really high,
Right.
and so that becomes a challenge, right? So you've got, cost of capital is brutally high. Home price appreciation has gone way up. And, again, there's another like unicorn statistic,
Right.
is that this is the first time in 30 years that we've seen home prices go up and rental prices remain the same.
Yep.
They haven't gone up, right? So it's like, okay, on one hand, we have undersupply on the sales side, but in the rental market, it's not that we have an oversupply, because properties go on the market, they rent,
Right.
but they're just not renting for more than they were 90 days ago, 6 months ago, whatever, right? Like the values haven't gone up, which is just unique. And so there's just a lot of unique things about this market that.
No, that's awesome. It goes back, and it's probably a perfect plug for putting data behind your decisions.
Yeah.
Right? You're doing the fix and flip model, not to mention predicting 3 months when the home is ready, but also is there new construction that you need to compare to, right? Long-term investor, what are you we can help you find the right property, but what are you going to rent it out for?
Yeah.
And you don't want to overdo it because of occupancy and vacancy, but you don't want to cheat yourself either, right? So again, I just think this is a perfect time to just plug in back to how our company was founded on the thesis of we want folks to sleep at night knowing they made a sound database decision. Right. And that's what it's all about. So I appreciate you sharing that insight there.
Yeah.
Yep. Talk to me about the long-term policy changes. So you think about infrastructure development. You hear a lot as of now as affordability. Mm-hmm. And a lot of people are really talking about this. Mm-hmm. I just moved back to Scottsdale area. Mm-hmm. It's expensive. And I left in 2018. Yeah. And now I come back in 2024. Yeah. It's a whole different ballgame for folks. Yeah. So give me your intake there on the affordability as it relates to a mom and pop investor.
Yeah, I mean, affordability is based on supply and demand, right? I mean, that's the fundamentals of how real estate just works. And, that's economics 101 is the fact that if you've got no supply, then, the demand is going to be the biggest factor. And right now, it's not like we've got like millions of buyers, right? There has been this is a record low for home sales year, just across the board, investment or not. Across the board, it's, home sales are down by 30% year over year.
Yeah.
30%, right?
I heard it's the worst since 1995.
Yeah.
Wow.
So, I mean, it's bad, right? Yeah. I mean, it's there's just not a lot of activity. It's kind of a stale market, and things are just not moving. It's very stale. But so if you think about that and you're going, okay, like what's driving home prices to stay up? It's because population grows, right? We continue to grow. And people are still moving, from state to state. And, the job reports have been actually pretty good. So people are still have their jobs, right? And because of that, there is some demand in the market. It's not that the market's dead. There is some demand. And it just happens to be enough to keep home prices where they are or go up a little bit, right? That's what we've been dealing with. I think what we're starting to see now, right, in the last 45 days, what we've started to see is like record number of supply hit the market. It was right after the Fed did their interest rate reduction, right? You saw people go, okay, I'm going to jump on this. I've been wanting to sell. This is my opportunity to sell. Right, and we both know that mortgage rates and the Fed rate are they're not synonymous, right? Those things are not synonymous. A lot of people think they are, but they're not. They're not even close.
Right.
And so you've got a market where you just have a lot of people looking at the supply that exists out there and willing to accept it because it's all there is. You know, like you and I had that conversation of like you guys looking for a house right now. The homes that you want, right, are not on the market. They're just not on the market. They're not there.
Yeah.
Right. And so what do you do as a buyer? Do you settle or do you just wait for that right opportunity to come? And I think, the demand that we see in the market today is a very small sliver of the actual demand potentially in the market. And I was looking up some stuff this morning. 9 out of the last 11 presidential election cycles, home prices went up within 3 months of the election. 9 out of 11 times. Went up.
Right.
9 out of 11 times. Right. So, and that could happen again. I mean, that could easily happen again. You start to see like, the mortgage rates are based on the 10-year treasury bonds, right? And that's how they base mortgage rates. Those have been held kind of artificially high due to jobs reports coming out that are like, I don't know. A lot of people argue that maybe those job reports are inflated to some degree, right? Because like they know their neighbor lost their job, but yet it's not showing up in any kind of report. So it feels like there's some stress in the market for that, but then the jobs report comes out and it looks good. So therefore the 10-year holds. But when maybe after the election, right, that's when we'll get like better data about the jobs reports. You'll start to see that the 10-year will start to drop and mortgage rates will follow as a result, right? Because they're chasing that 10-year bond number. So, I think that's when you could see all of a sudden now those that have been sitting on the sidelines jump back into the market. And that's how we're going to see some home price appreciation again. That's another reason that I've been kind of focusing on buying, because I do think that you're going to see, how long it lasts, I don't know, right? I don't know that it'll be like, 5 years of home price appreciation again. And I don't think it'll be 30% home price appreciation, but I just do think you've got a lot of pent up demand in the market. And, the next drop in rates, mortgage rates, puts just a ton of people into the market, and they're going to be chasing that same low number of inventory, and it's going to push values back up again. 9 out of 11 times. That's pretty good statistically. That's happened.
Yep.
Yep. Yeah, I think the bottom line, right, is that, it's natural to feel uncertain in an election year. It's just natural, right? I don't think it's been greater than it is right now. You know what I mean?
Why do you think that? No,
no, we're not going there. We are not going there. Yeah. But I mean, it's so contentious, it's just so contentious.
Yeah.
And like we as humans, we're just not wired to deal with that kind of stress. Like that is just a lot of stress and noise and information, especially like where you and I are at in Arizona. I mean, we're one of these swing states. I mean, the television I'm having a hard time watching TV just with the commercials right now because they're, it doesn't matter what side. I don't care. All I care about is like, it's just a lot of mud.
And to that point, it's not about which side you agree to, but it does create emotion and tension.
Yeah.
Right? So when you add in the fact affordability, you add in the fact interest rates, the amount of down payments you have to put in place to do this, this becomes tough and hard. And now you want to sit back, especially think about where we just came from.
Right.
We come from a low interest rate where there's a lot of people sitting on cash, right? They have it and they're like, if I sell, where am I going to go?
Right.
That's how people are thinking right now. And maybe maybe there's the mom and pop investors that are under that same belief, right? Or just fear. I think a lot of times I just nervous energy, fear. I'm afraid to pull the trigger, but also I'm afraid to miss. That's the thing with real estate too. You can miss a window as well, right? Yeah. By the way, have you ever missed a window that
God, yes.
Do you ever kick yourself like I should have pulled the trigger?
Totally, yeah. I mean, I've been late a couple times, right? So late to the dance, nobody wants to be late to the party, but I think what you can follow, if you're a real estate investor and you're thinking about like right now, should I buy, should I wait? You're sitting, to your points, I'm on cash. If I had additional equity in my own home, one of the things that I would consider now is potentially pulling out some of that equity to go buy another property, go buy a rental property, and you do that. So home equity lines of credits, like I was reading the other day, that they're up like 56%. So a lot of people are trying to tap into that monopoly money that they've appreciated, their home price appreciated. They want to grab it now because they're starting to see that it could potentially go the other way. And so they're jumping in to grab that. And I think if I was looking to buy some real estate, invest and create some passive wealth, that would be a good option, right? Use some of that monopoly money. Go out, get one of these properties right now. Even if I'm paying a little bit more in my rate, I can refinance it later. But I want to get the property now, right? Because I can use potentially like monopoly money to go get it.
Yep.
And I think that strategy works really, really well. We do see a lot of like that cash buyer is kind of been idled and on the sidelines. The guy that wants to spend 100% of his cash, just because they tend to try to wait and buy at the absolute bottom, and be as patient as they can to buy at that absolute bottom. And there'll be signals for that. Like we'll know that things are starting to go the other direction, and we're starting to see signs of that today. I mean, we're getting offers accepted that there was no way 4 months ago they would have gotten accepted.
Right.
That just home sellers weren't doing it. And then offers, agents are really sending a lot more volume of properties in, right?
Yep.
And I don't know if you saw this one. Did you see that that credit card debt is higher now in the country than it's ever been?
I could not believe that actually
Why
when I
not?
saw that art. Just simply because of what we just talked about. How many people are sitting on cash right now? Like,
what is equity, right?
Yeah.
Like that, we could do a whole episode just on that.
Yeah.
But like, it's monopoly, right? I mean, it's okay. You bought your house for $400,000. Today it's worth $600,000. So you have $200,000 in equity. But how do you get it?
yeah,
It's not free. You can't just get it. You know what I mean? You have to sell your asset to get it. Or you've got to do like a home equity line or something like that to get it. Now you're paying interest on it. So it's not free.
Right.
Equity isn't free. And I think that's where a lot of people get in trouble too, is they look at the value of their home and they're like, oh, I'm sitting on, if they're sitting on $1 million or something like that on their equity of their home. I've seen that erode really quickly. And I don't remember if you remember, I had a condo in Town Lake that I lived in college.
Yep, I remember.
So, my dad bought that condo when I came back to go to school here. And this is like 2002. So we, moved in the place, lived there on and off. So I ended up moving in and out of this thing 7 different times, right? Because I would go buy a different house, come back to it, rent it for a little while, whatever. Now it just stays rented and I still have it.
Wow.
And the reason that I still have it is because I missed the market on something, right? Like I absolutely missed.
That's awesome.
They, I was sitting there in like 2005, 2006, and I was getting letters, like buckets of letters coming in every week from home investors or home buyers that were wanting to buy my home. The home prices were appreciating so fast that, you couldn't catch up, right? So they just kept wanting to buy the property. So I'm watching this and I think, if I remember right, we paid like $250 or something for the condo. And, I started getting letters at like $350, $400, $500, $600, $700, $800, right? And I was telling my friends, I said, well, if the value of this thing goes to $1 million, I'm out. I will sell this for sure.
That's the number.
But I'm not selling for anything less than $1 million, because in my mind at that time, I never thought the floor was going to end. I was like, well, that was my first, post-college cycle that I ever sat through. And I watched this thing appreciate. And I think the highest offer I got was like mid-8s. And I was like, someone will offer me $1 million, just a couple weeks, couple months, I'll get an offer for $1 million. I know it's coming. And then the shoe dropped, right? And I mean, I couldn't have given it away for a while there at like 300,000, right? And then now, I mean, it's gone back up in value, but it's not, it'll never go back.
Did it ever make $1 million yet? Still?
No, still 20 something years later, still never got my $1 million out of that.
Oh, that's awesome. So in closing, when you're investing in an election period, I think about the mom and pop. I think about the institutional buyer. The mom and pop probably doesn't have a lot of capital as the institutional buyers. If I am an institutional buyer, am I doing something different in an election year than if I'm a mom and pop?
Yep.
Does that make sense? I hope that makes sense. Should I do something different there or should I think differently?
No, I mean the bigger buyers, we don't see the cycles typically with regard to election, non-election.
Right.
That's a business. They're buying properties as a business. They're just operating. The reason that a lot of them are not buying right now is due to the prices and the rates.
Yep.
Those are the two things that are keeping them on the sidelines. And the pent-up demand, like I said, I mean, it's not a little, it's a ton. Yep. Like we've never seen more capital raised for single-family real estate investment than we've seen today. Like it's literally sitting, waiting to be deployed as soon as one of those things drops, right? If it's home prices first, fine. You might see them wait for a little while to see how far they drop. But rates won't be very far behind it, and then now it's the making of the perfect storm to really start to engage and start buying because, that's when we see rental rates go up, right? The demand for rentals goes up in those kind of markets. And so, it's coming, we're just we're a little early right now in Q3, but like by the middle of Q1, it's going to be a different ballgame for sure.
Yeah.
And we're starting to see the rumblings of that already.
Yeah. So regardless if you are a mom and pop, a institutional buyer, now's the time. Now's the time to buy. Make sure you sign up with Easy Street. We build your customized buy box and find this property for you. And by the way, rental percentage is going up every single year. So long-term investors, that's a call for you. Yep. More people are renting. There's a lot of people that don't want to buy. Right. And that's the perfect audience for you. Yeah. And so, I appreciate it.
Get that 15-year mortgage and let someone else pay it off for you.
That's right.
That's like the fundamental business game, right? Do that and just ride it out.
Yes, sir.
Because eventually it will get there. It might see bumps in the road, but you will pay off your 15-year mortgage at some point. And then now you own the asset free. And that's a retirement. That's great. That's great news.
Oh, good to talk to you today.
All right, buddy. Thanks, man.
By the way, you never told us what you're going to be for Halloween.
Oh, this year I'm a basketball player. So my son is going to be the Suns gorilla.
All right.
And so I'm going to be a Suns player. So I got to get a jersey.
I'll get you a Laker jersey. How about that?
No, please don't.
Let's be a Laker.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.